Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about the multifamily market, and I think I have some more questions to ask Jim Schroder with Tribridge. I've brought him back here in Studio One, and Jim, it seems like there's a lot of potential in the market. There's also some things that could be detrimental to the market. Are you guys buyers or sellers in this market?
I would say yes. We are both. We are selling our older assets that have increased deferred maintenance on them, particularly our assets that we want to hold long term. Real estate's a long-term asset that you hold for the long term and grow with rents and capital appreciation. So we're buying older assets and trading into newer assets with lower risk. At the same time, we're also very strong in terms of the acquisition side. And one of the reasons is we have very strong appetite from investors. Particularly with what's happened over the recent couple months, the volatility in China that started back in August and has continued, gas prices bottoming out, the stock market volatility in the recent month, it's only increased buyers' appetites to be in real estate. So we continue to see strong demand. Our investors, we have capital coming out of China, out of Singapore, and significant amounts here domestically in the US. When they see the stock market drop 10% over a month, it reminds them, hey, I want to be in something long term, and that's going to basically steadily rise as I hold it and produce dividend returns along the way. So whether our investors are looking for low risk, low return core assets, in many cases they compare them to bonds, versus looking at the value add, a little higher risk, higher return, or the most risk, most return, your ground up development deals where you can double your money over 3 to 4 years. There's very strong demand across all three sections.
Okay, and I want to get this question to you because my listeners and viewers are always interested in, especially someone in your point of view, where you're developing, buying, owning, you're trying to make decisions daily on what you're going to do there. How do you think rising interest rates are going to impact cap rates and valuations of apartments?
Great. Well, first, we don't think interest rates are going to rise as quickly as it was first indicated by the Fed. They obviously raised interest rates, but now they've seen some indicators, particularly from global impacts, China, what's happening there, and just the other developing economies are putting headwinds against that. So we're not as optimistic they're going to raise interest rates as much this year as many people think. That said, when they do rise, there will be a slight impact on cap rates, but typically if you look at the long-term averages, for every 1% interest rates rise, cap rates rise about 50%. At the same time, you always look at what's the spread from your bonds to real estate. And traditionally, over time, it's somewhere between 200 and 300 basis points. And when you get into the peak of a market, it gets down as low as 100 basis points. And today, they're definitely at the 300 basis points and higher. So we think even as interest rates rise, that spread between bonds and cap rates can definitely decrease and absorb some of that. And that's basically why for every 1 point in interest rate increase, you're not going to see 1% interest increase in the cap rate.
Okay, so that's one of the reasons you're still a buyer in this market.
Absolutely.
Yeah. Okay. What about FIRPTA? I mean, the changes there for foreign investors to invest in the U.S., how do you think that could impact the multifamily market?
So I think that'll definitely have an impact. I don't think it'll be too significant. We already have a significant amount of foreign buyers entering the market. Your foreign pension funds and sovereign wealth funds are already exempt to U.S. tax anyway. So they've been investing heavily, hundreds of billions of dollars into U.S. real estate. Where this is going to impact are those groups more in the margins, not as large. So it will definitely help them. At the same time, it's not going to have as widespread effect as we would have liked. We would love for our groups of investors in the $10 to $20 million range to be able to not have to pay taxes or withholdings on their income in the U.S. The bill didn't go that far. So it would have an impact, but not a widespread impact.
Okay. Well, Jim, thanks for your thoughts and your ideas. We appreciate you being on the show today.
Thank you for having me on. It's been a pleasure.
And thank you for joining us out there on one of the 47 radio stations, YouTube, iTunes, or the show website, commercialrealestateshow.com. Remember, we love hearing from you, so please do subscribe to our YouTube channel, subscribe to iTunes, and connect with us on social media like LinkedIn and Facebook and Twitter. And be sure and join us next week. We're going to talk about the industrial market. That's been a crazy market. Is it time to invest there? We'll talk more about that. So until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit creshow.com.